Hi guys, this is CA Balakrishna. Till now we have completed revision of two chapters relating to directors. That was appointment and qualification of directors and appointment and remuneration of managerial personnel. Now in this class we will be discussing the balance chapter relating to directors. That is meetings of board and its powers. Basically in this chapter we will be having from section number 173 to section number 195. We'll start with section number 173, which deals with meetings of board. Basically it deals with the number of board meetings that has to be conducted and the time limit within which it has to be conducted. You can divide it into two parts. First one would be first board meeting. That means the first board meeting of the company must be conducted within 30 days from the date of its incorporation. That is relating to first board meeting. And subsequent board meetings. Relating to subsequent board meetings, every company must conduct at least 4 board meetings in each calendar year. Okay, not financial year. In each calendar year, every company must conduct at least 4 board meetings. And the gap between 2 board meetings should not be more than 120 days. Hope that is clear. That is relating to subsequent board meetings. Now there is one important point, that is the gap between last board meeting of previous calendar year and first board meeting of current calendar year should also be not more than 120 days. Hope that is clear. Next, now if you want to conduct a board meeting, you have to issue a notice. Okay, notice has to be given to all the board of directors. Now what is the time limit for giving the notice? Generally the notice relating to board meeting must be given at least 7 days before the conducting of board meeting. That is a general rule, but however shorter notice can be given. See, for discussing some urgent business, the company can conduct board meeting by giving some shorter notice, but subject to the condition that if the company gives shorter notice than 7 days, then for such board meeting at least one independent director must attend. Okay, what if at least one independent director has not attended and the company has conducted board meeting on issue of shorter notice? In that case, you can conduct the board meeting. In the board meeting some resolution would have been passed now. That resolution has to be circulated to all the directors, and such circulated resolution must be approved by at least one independent director. Hope that is clear. See, in the first case we are conducting the board meeting at a shorter notice. To conduct such board meeting, at least one independent director must attend such board meeting. See, attending is important. It is not necessary for such attended independent director to approve the resolution. Hope that is clear. Now in case at least one independent director is not attended such a shorter such a board meeting which is conducted at a shorter notice, in that case the resolution passed at such board meeting must be circulated to all the directors, and such a circulated resolution must be approved by at least one independent director. Hope this is clear. Now you have issued the notice of a board meeting to the director. Now the director has to attend the board meeting. Another issue, the notice of board meeting must be given to all the directors. Okay, whether he is alternate director, whether he is additional director, whether it is women director, whatever the case might be, if at all he is a director, you must issue the notice. Hope that is clear. Now once the notice is issued to the director has to attend the board meeting. Now the director can attend the board meeting either physically or through audio visual means or through video conferencing mode. These are the 3 options for attending the board meeting. Now this video conferencing, whether it is mandatory for the company to provide the option of video conferencing, no, it is not mandatory. At the option of the company, it can either provide or it cannot provide. It need not provide the video conferencing. If at all the option for video conferencing is available, such note must be mentioned in the notice of the board meeting. Hope that is clear. Now whether the director can request the company for conducting board meeting through video conferencing, that is to enable video conferencing option? The answer is yes, director can request, but even though director requested, it is not mandatory for the company to provide this option of video conferencing. It is completely at the option of the company. Okay, another question is, company has not provided option of video conferencing, but the director wants to attend the board meeting through video conferencing arranged by himself. Whether he himself can arrange the video conferencing mode? The answer is no. If at all company provides option, that is if company arranges video conferencing option, only then the director can utilize such video conferencing option. Director himself cannot create, or at his own cost he cannot attend the video conferencing, attend the board meeting through video conferencing. Hope that is clear. Next, exemption. That means exemption from the 4 board meetings, and gap between 2 board meetings should not be more than 120 days. To which companies such exemption is available? 1-person company, small company, dormant company, private startup company. For these 4 types of company, it is sufficient if they conduct 1 board meeting in each half of calendar year, and gap between 2 board meetings should not be less than 90 days. Okay, these companies need not comply with 4 board meetings in calendar year and 120 days gap. It is sufficient if they comply with this condition. Okay, in case of section 8 company, section 8 company must conduct at least 1 board meeting in every 6 calendar months. Next, matters which cannot be dealt in meeting through electronic mode. See, if any board meeting is conducted through electronic mode, that is through video conferencing or other audio visual means, then the following matters cannot be discussed at such meeting. What are they? Approval of financial statements, approval of board report, approval of prospectus, and matters relating to amalgamation, merger, demerger, acquisition and takeover. These 4 aspects cannot be discussed at a board meeting which is conducted through video conferencing or other audio visual means. However, these matters can be discussed at such board meeting provided quorum is present in physical. Okay, the quorum is 1/3 of the total director. If such 1/3 of total director have attended the meeting through physically and the balance directors are participating through video conferencing mode, then in such case these matters can be discussed at such meeting. Hope that is clear. Next, even audit committee meeting at which the financial statements of company are considered, even such a type of meeting cannot be conducted through video conferencing. Hope that is clear. However, if quorum is present through physically, then they can discuss even such matter also. Hope that is clear. See, the note is the same point has been specified. Once quorum is present physically, then above matters can be discussed even if some of the directors are present through video conferencing mode. That is section number 173. Moving to section number 174. Quorum for meetings of board. See, generally speaking, the quorum is 1/3 of the total directors or 2 directors, whichever is higher. In case of section 8 companies, quorum is 8 directors or 25% of the total strength, whichever is lower, provided the strength is not less than 2 directors. Okay, minimum 2 directors must attend the meeting. Hope that is clear. That is the quorum in case of section 8 company. And exception. See, if interested directors are more than 2/3, that means generally the quorum is 1/3. If interested directors are there, a particular contract or particular resolution has come to the board meeting for approval, and more than 2/3 of the directors are interested in such resolution. If the directors are interested in the resolution, they should not participate in such a board meeting for discussing such resolution. Now, in this case, more than 2/3 of the directors are interested in such resolution. Now, what will be the quorum? The quorum will be balance uninterested director will be quorum for such purposes, provided such balance uninterested persons are not less than 2. Hope that is clear. Next, Adjournment of meeting. See, meeting of the board meeting can be adjourned in two cases. First one is due to lack of quorum. Second one is due to unfinished business. Now, to which date the board meeting can be adjourned? It can be adjourned on the same date, same time, same place next week, provided such date is not a national holiday. Okay, if such date is a national holiday, then you have to adjourn it to next day, which is not a national holiday. Next, this section is not applicable to one person company. Okay, this section relating to section number 174, which is relating to quorum, is not applicable to one person companies. Okay, next, section number 175, which deals with resolution by circulation. That means in this section 175, the company need not conduct board meeting. See, company will be entering into various transactions on a day-to-day basis. Now, there will be various approvals required from the board of directors on a day-to-day basis. Now, for taking each of these approval, if the company has to conduct a board meeting, then it would result into a costly matter. Thereby, to prevent the costs that are incurred on conducting board meeting, the concept of resolution by circulation is introduced, wherein requirements to pass resolution by circulation. First of all, you have to prepare a draft resolution, and this draft resolution shall be circulated to all the directors. How you will circulate? At their addresses, either by hand or by post or through electronic means. That means through email also you can circulate. And once you have circulated, such resolution must be approved by majority of directors. Okay, once majority of directors approve such resolution, then it will be deemed that such resolution has been passed. Hope that is clear. Now, however, once the resolution has been passed through such resolution by circulation, in the next board meeting, okay, there will be a next board meeting conducted now. In such next board meeting, the details regarding this resolution by circulation has to be mentioned or written down in the minutes of such next board meeting. Hope that is clear. Now, see, the draft resolution has been circulated to all the directors. Once the draft resolution has been circulated, at least 1/3 of total directors requested that this resolution which is circulated to us should not be passed through resolution by circulation. We have to discuss this matter in the board meeting. Okay, such a request has been made by at least 1/3 of total directors. In such case, such resolution would be put to the discussion at the next board meeting. Hope that is clear. Next, section number 177, which deals with audit committee and whistle mechanism. Now, first of all, applicability of audit committee. It is the same as applicability of independent director, as we have discussed. See, audit committee is applicable to every listed company and unlisted public company having paid up share capital of more than or equal to 10 crores or turnover of more than or equal to 100 crores or outstanding loans, debentures and deposits of more than 50 crores. These are the limits which we have also discussed for independent director. Now, if any company falls into these criteria, then they must constitute a audit committee. Now, there is a point. See, if these three conditions are not satisfied by the company for 3 consecutive years, then it need not constitute a audit committee. Hope that is clear. Okay, if these three conditions, any of these three conditions are not satisfied by the company, not any of the 3 conditions, all of the 3 conditions are not satisfied by the company in a 3 consecutive years, okay, continuously for 3 consecutive years, then the company need not constitute a audit committee. Hope that is clear. Next, exemption. In these 3 types of companies, that is unlisted companies, which are joint venture company, wholly owned subsidiary and dormant companies, these companies need not constitute audit committee. Okay, now composition of audit committee. How many directors must be present in the audit committee as members? Minimum 3 directors with independent directors forming majority. Okay, and for section 8 companies, requirement of majority independent directors is not applicable. Hope that is clear. That would be the composition of audit committee. Now, responsibilities of audit committee. What are the various responsibilities that audit committee must discharge? First one, recommendation for appointment and remuneration of auditors, review of auditor's independence and his performance. Next, examine financial statements and audit report, scrutinize intercorporate loans and investments, valuation of assets. That means it will not conduct the valuation, it will appoint registered valuers for conducting valuation of assets or the undertaking of the company. Next, monitor end use of funds raised through public offers. Okay, if the company has raised money through public offers, whether such amount which has been raised is used for the purposes that have been specified in the prospectus or not, that has to be monitored by the audit committee. Next, approval of related party transaction. Okay, if the company wants to enter into any related party transaction, then the approval of this audit committee is required. However, audit committee, there is a concept of omnibus approval, wherein audit committee can grant omnibus approval to this related party transaction. That means in a particular year, the company might enter into various related party transactions. Let's say there is one particular person, let's say Mr. A, he is a related party of company. Now it is common that company will be entering into related party transaction with Mr. A at least 4 to 5 times in a month. That means for every transaction it need not take the approval of audit committee. Instead, what audit committee will do is, it will give a omnibus approval, saying that whatever the transaction you enter with this person Mr. A, up to certain limit of transaction during this period, we are giving a omnibus approval. Okay, you can enter into the transaction up to such limit with that person without taking approval, because we are giving omnibus approval to such type of transaction. But however, such omnibus approval will be valid only for maximum of 1 year. Hope that is clear. Next, that is regarding omnibus approval. Next, whistle mechanism. What is this whistle mechanism? Basically, this facility of whistle mechanism is available to directors and employees of the company to inform or to complain their genuine concerns to the top management. Basically, top management means, in the whistle mechanism, the reporting entity would be audit committee. Okay, the directors and the employees can report their genuine concerns in the company to audit committee. In case the company is not required to constitute a audit committee, then board of directors will nominate a particular director, and the directors and other employees can report to such nominated director. Hope that is clear. That would be the concept of whistle mechanism. Now, applicability of this whistle mechanism. To which companies this whistle mechanism is applicable? First of all, every listed company and companies accepting deposits from public. Okay, if any company is accepting deposits from public, then it must constitute a whistle mechanism. Next, companies which have borrowed money from banks and public financial institution in excess of 50 crores. Even such type of companies should also constitute a whistle mechanism. Okay, audit committee will oversee the whistle mechanism. In case the company is not required to constitute a audit committee, then board of directors will nominate one director in case of company does not have audit committee. Next, now adequate safeguards against victimization. See, some employee or some director has reported any fraud or any type of misconduct in the company to the audit committee against some other person. Now, this whistle mechanism should make sure that adequate measures for safeguarding the victimization of such person who has utilized this whistle mechanism must be provided. Okay, the other person on whom this director or this employee has reported might cause some harm to this person. Okay, now the whistle mechanism should provide adequate safeguards to protect this person who has reported to audit committee by using this whistle mechanism. Hope that is clear. Moving to section number 178, which deals with nomination remuneration committee and stakeholder relationship committee. First of all, we'll see nomination and remuneration committee. The applicability will be same as audit committee, that is all listed companies and all unlisted public companies which are falling into that criteria. Applicability same as audit committee. Composition, it must contain 3 or more non-executive directors, okay, of which not less than half should be independent director. This would be the composition of nomination and remuneration committee. And see, for the company there will be a chairperson now. Such a chairperson of the company cannot be appointed as chairperson of this nomination and remuneration committee. However, such chairperson can be appointed as member of this nomination and remuneration committee. Hope that is clear. Next, objective of nomination and remuneration committee is to recommend for appointment and remuneration of directors and other top level employees. That would be regarding the nomination and remuneration committee. Moving to stakeholder relationship committee. Applicability, company which has more than 1000 shareholders or debenture holders or deposit holders must constitute this stakeholder relationship committee, and the chairperson of this stakeholder relationship committee must be a non-executive director, and the objective of this stakeholder relationship committee is to consider and resolve the grievances of stakeholders. That would be section number 178. Moving to section number 179, which deals with powers of board. See, powers of board means these powers must be exercised by the board of directors in a board meeting only. Okay, these powers cannot be exercised by resolution by circulation. Hope that is clear. See, must be exercised in board meeting only and cannot be decided by resolution by circulation. What are these powers? First power, make calls on the shareholders, okay, to pay the unpaid calls on the shares. That is the first power. Authorize buyback under section 68. Issue securities, whatever the security it might be. Next, related to money, borrow money, invest money, or grant loans or guarantees. These 3 powers must be exercised only in the validly conducted board meeting. However, board of directors can delegate these powers. Hope that is clear. These 3 powers are there, borrowing of money, investing of money, and granting loans. These 3 powers can be delegated to some other director or some managing director or whole time director. Okay, to whomever they want, they can delegate these 3 powers. And these the approval for these 3 transactions is not required in case of banking company, because if you see, the nature of business of this banking company itself is to accept deposits and to give loans. If at all it goes on taking approval for each of such a transaction from the board of directors, it is not possible. Thereby, for banking companies, exemption has been provided from taking board's approval for these 3 matters. Hope that is clear. Next, approval of financial statements and board report. Diversify company's business. Approve amalgamation, merger, reconstruction, takeover. And Rule 8 matters. What are Rule 8 matters? Contributing any political contributions, or appointing or removing any key managerial personnel, and appointing internal or secretarial auditors. All these powers must be exercised by the board of directors in the board meeting only. Next, section number 180, which deals with restrictions on powers of board. Restrictions means, that means must be exercised by shareholders in the general meeting. Okay, restriction on powers of board of directors means these powers must be exercised by shareholders only. That means you can simply call it as powers of shareholders. Okay, they have to approve these 4 resolutions which we will be discussing through general meeting special resolution, okay, by shareholders. What are they? First one, sell or lease whole or substantially whole of the undertaking. Okay, if the company wants to sell or lease whole or substantially whole of the undertaking, then it has to take general meeting special resolution. Now the question is, what is meant by undertaking? See, undertaking means a particular entity whose net worth or whose assets exceed 20% of net worth of the company. In that case, such entity would be known as undertaking of the company, or generates 20% of total income of the company. Even if an entity generates 20% or more of total revenue of the company, in that case such entity would be known as undertaking of the company. Hope that is clear. That is regarding undertaking. Now here you can find a term substantial. What is meant by substantial? Substantial means 20% of such undertaking. Okay, 20% or more of such undertaking would be known as substantial. Hope that is clear. This is the first transaction for which approval of shareholders through general meeting special resolution is required. Hope that is clear. That means if board of directors wants to sell or lease whole or substantially whole of the undertaking, they have to take approval of shareholders through general meeting special resolution. Next, invest compensation received from amalgamation in other than trust securities. That means, let's say the company has entered into some amalgamation. When it enters into amalgamation, it will be receiving some compensation now. Now, this compensation, if board of director wants to invest this compensation received into other than trust securities, that means they want to invest this amount of compensation into securities which are risky. Basically here trust securities means example would be government bonds or treasury bonds. If board of director wants to invest this compensation in securities other than government bonds or other than treasury bonds which are safe bonds, they have to take approval of shareholders through general meeting special resolution. Hope that is clear. Next, borrowal of money. See, if a board of directors want to borrow money, provided that such borrowing along with the existing borrowings. See, now the company wants to borrow some money. Before borrowing, it would already be having some borrowings now. Now, existing borrowings that are already there plus proposed borrowings, that is the borrowings that the company wants to make. These both together, that means existing borrowings along with the proposed borrowings exceeds paid up share capital, free reserves and securities premium. Okay, taken together. If proposed borrowings plus existing borrowings exceeds paid up share capital, free reserves and securities premium of the company, in that case for proposed borrowings the board of directors have to take general meeting special resolution. Hope that is clear. Now, while calculating this proposed borrowings plus existing borrowings, you should not include short term borrowings. That means borrowings that are repayable within 6 months would be known as temporary borrowings or short term borrowings. Such borrowings should not be included while calculating this amount. Hope that is clear. However, short term borrowings which are taken for capital expenditure must be included. Okay, you have taken borrowings for incurring some capital expenditure and you will be repaying such borrowings within 6 months. Even though you will be repaying such borrowings within 6 months, since such borrowing was taken for capital expenditure, you have to include it while calculating this proposed borrowings plus existing borrowings. Hope that is clear. Next, give additional time to directors for repayment of debt. See, directors of company have taken some loan from the company and they want some extension of time. For granting such extended time, the board of directors have to take approval of shareholders through general meeting special resolution. These are the 4 powers which can be exercised only by the shareholders. Hope that is clear. That is section number 180. Moving to section number 181. See, till now what we have discussed. Section number 173, that is meetings of the board, the time limit for conducting meetings of the board. Section number 174, which is relating to quorum of meeting. Next, section number 175, which deals with resolution by circulation. Next, section number 176, which deals with validity of acts. That concept we have already revised while discussing the first chapter, that is appointment and qualification of directors. In that chapter we have revised the section number 176. Next, section number 177, which deals with audit committee and vigil mechanism, and section number 178, which deals with remuneration committee. Next, section number 179, powers of board. Section number 180, powers of shareholders. Moving to section number 181. C, charitable contributions. If company wants to make any donations to charitable entities, then what are the procedure to be followed? What are the approvals to be taken? First of all, this section is applicable to both private companies and public companies. Limit not exceeding 5% of average net profit for 3 preceding financial years. If company wants to contribute an amount not exceeding 5% of average net profit of preceding 3 financial years, in that case board meeting ordinary resolution is sufficient. If at all company wants to contribute in excess of this limit, in that case it has to take general meeting ordinary resolution. Okay, this is section number 181. Next, section number 182, political contributions. First of all, applicability. This section is applicable to all companies except 2 companies. What are they? Government companies and company which is in existence for less than 3 years. That means these 2 companies cannot give any political contributions. Hope that is clear. Now, what is the limit? There is no limit. Whatever the amount of political contribution that the company wants, it can give by taking just board meeting ordinary resolution. Okay, shareholders approval is not required. Disclosure. Such amount which has been contributed to political, the political contributions must be disclosed in the profit and loss account of the company, on the face of profit and loss account. Next, section number 183, which deals with contributions to defense fund. Applicability is to all companies, and limit, there is no limit. Whatever the amount the company wants, the company can donate by taking board meeting ordinary resolution, and disclosure has to be given in the profit and loss account. These are the 3 sections relating to contributions. Section number 181, 182, 183. Next, section number 184 deals with the disclosures that we will be discussing at the end. Now we will move to section number 185, loans to directors. See, even though the name of the section is loans to directors, there are still various other parties which have been discussed in section number 185. Let us see. Basically, the general rule is that the company cannot give loan to the directors. Not only to the directors, company cannot give any loan to any person who will be able to control the loan. Hope that is clear. Here, this section deals with not only loan, it deals with loan, guarantee, security. Okay. Section number 185 deals with these 3 transactions. Now, first of all, in this section number 185, there are basically 5 transactions. All these 5 transactions are relating to loan, guarantee, security, but to various parties. Okay, to 5 different types of parties. Okay, that is the structure of section 185. We will be discussing 5 transactions. All these 5 transactions are granting of loan, guarantee, security by company to various parties. Okay, there will be different party in each of this transaction. Now, of these 5 transactions, 2 transactions are completely prohibited, and remaining 3 transactions can be entered subject to some conditions. This is the brief idea of section. Okay, now we'll discuss the section. Transaction number 1. The company wants to give loan, guarantee, security to following people we will discuss, which is completely prohibited. Okay, this is completely prohibited. Company cannot do this. What are they? There is particular company. Okay, it wants to give loan, guarantee, security to its director or partner or relative of such director, which is completely prohibited. Hope that is clear. Now there is a company. For this company there is a holding company, that is H. In this holding company there will be some directors now this company wants to give loan guarantee security to this director or his partner relative is also prohibited. Hope that is clear. However, holding company cannot give loan guarantee security to its directors or partners or relatives. Hope that is clear. But for company there would be some subsidiaries and in subsidiaries there will be some directors For such directors the company can give loan guarantee security. Hope that is clear. However, subsidiary company cannot give loan guarantee security to its own directors. Hope that is clear. This is the first transaction which is completely prohibited. If you want, you can take a screenshot of this. We'll move to the next transaction. See, wantedly I am moving somewhat slow here so that you will be able to understand it clearly. Next, transaction number 2. Even this transaction number 2 also completely prohibited. It also deals with loan guarantee security to whom? See, I have explained it with an example. There is a particular company by name B Limited, okay, not Bala Limited. This company wants to give some loan guarantee security. Okay, now in this Bala Limited there is a particular director by name Bala. Okay, now this Bala is partner of Bala and Co, which is a partnership firm. Now this Bala Limited wants to give loan guarantee security to Bala and Co partnership firm, in which one of its director is a partner. Whether it can give or not, it cannot give, which is completely prohibited. Hope that is clear. Next, this Bala is there to him there is particular relative, okay, Bala's relative. This Bala's relative is also partner of some partnership firm by name Relative and Co partnership firm. Now Bala Limited wants to give loan guarantee security to this Relative and Co firm. It cannot give, which is completely prohibited. This is the second transaction. You can take a screenshot of this. Hope this is clear. Moving to third transaction. Now from this third transaction, these are not completely prohibited. They are permitted subject to general meeting special resolution, and such funds must be utilized for the principal business activities. Okay, let us see the third transaction. Even this third transaction is also related to loan guarantee security to whom? We'll see. There is particular company Bala Limited. Okay, this Bala Limited wants to give loan guarantee security to whom? First of all, in Bala Limited there is a particular director by name Bala. Okay, now this Bala is director of some other company by name Krishna Private Limited. Okay, see, it is private limited, and also he is also member of some other company by name Hari Private Limited. Okay, private limited is important. Only to private limited, only private limited companies covered in this transaction. Now this Bala Limited wants to give loan guarantee security to Krishna Private Limited. Whether it can give or not, it can give subject to general meeting special resolution in this Bala Limited. And also the Krishna Private Limited is there it must utilize the funds borrowed from Bala Limited only for its principal business activities. Okay, and also Bala Limited wants to give loan guarantee security to Hari Private Limited. Whether it can give or not, it can give subject to general meeting special resolution in Bala Limited, and the funds must be utilized by Hari Private Limited only for principal business activities of Hari Private Limited. Hope that is clear. This is transaction number 3. You can take a screenshot. Hope this is clear. Transaction number 4. Even transaction number 4 is also not completely prohibited. You can enter into transaction 4 subject to general meeting special resolution and funds must be utilized for principal business activities. Let us see what is the third transaction. See, the fourth transaction. Body corporate whose not less than 25% voting power is exercised by directors of lending company. See, example, there is Bala Limited. This is a lending company. It wants to give loan guarantee security. In this, there are two directors, Director B, Director A. Now, Director B is holding 15% voting rights in Krishna Limited and Director A is holding 20% voting rights in Krishna Limited. Together it would be 35%, which is more than 25%. Okay, in the transaction we have seen not less than 25%. Now this Bala Limited wants to give loan guarantee security to Krishna Limited, whether it can give or not. The answer is it can give subject to general meetings special resolution in Bala Limited and funds must be utilized by Krishna Limited only for its principal business activities. That is transaction number 4. We can take a screenshot. Hope this is clear. Next, transaction number 5. Same, even this is also permitted subject to general meeting special resolution and funds are utilized for the principal business activities. It also deals with loan guarantee security. What is it? See, the company wants to give loan guarantee security to a body corporate whose management is accustomed to act as per instructions of lending company's directors. See, there is a particular company B Limited. In this B Limited there are some directors. Okay, Director 1, Director 2, Director 3. There is some other company by name X Limited. Now the X Limited has accustomed to act as per the instructions given by these directors. This is the scenario. Now if B Limited wants to give any loan guarantee security to X Limited, it can give subject to general meeting special resolution and funds must be utilized for principal business activities of X Limited. This is the last type of transaction. Okay, this is transaction number 5. By this we have completed section number 185, which deals with loans, guarantees, securities to the persons specified under various transactions. Now moving to section number 186. Even this section number 186 also deals with loans, guarantees, securities. Apart from these three transactions, there is another transaction which is investments. Okay, section number 186 also deals with investments to persons other than those specified in section number 185. Let us see. See, first of all, we can divide this section number 186 into two parts. One is loans, guarantees, securities. Another one is investments. Now, to whom the loans, guarantees, securities are given? They are given to parties specified under section 185. If the loan, guarantee, security is given to parties specified under section 185, then there is a specific section to govern those parties. Thereby, such type of loan, guarantee, security will be governed by section number 185 only. If at all loan, guarantee, security is given to others, okay, other than parties specified under section 185, then section number 186 will be applicable. Hope that is clear. In the same way, investments is not dealt by section number 185. Thereby, investments in whichever type of company you make, okay, whether investment is being made in parties specified under section 185 or others, section 186 only will govern, because the concept of investment is not dealt by section number 185. Hope that is clear. This is the idea of section number 186 and the difference between section number 185 and section number 186. Now see what section number 186 says. First of all, section number 186 says that if company wants to grant any loan, guarantee, security or investment it must compulsorily take board meeting unanimous resolution. Okay, board meeting unanimous resolution is must for any loan, guarantee, security or investment that are covered under section 186. Okay, board meeting unanimous resolution. And general meeting special resolution is also required if the following scenario exists. What is it? See, existing loans, investments, guarantees, security plus proposed loans, guarantees, investment, securities, that is existing plus proposed, is more than 100% of free reserves plus securities premium or 60% of paid up capital, free reserves, securities premium, whichever is higher. See, you have to read it from back. See, first of all, you have to calculate higher of 100% of free reserves plus securities premium or 60% of paid up capital, free reserves, securities premium. You will arrive at some amount. Okay. Now, you have to calculate existing plus proposed loans, investments, guarantees, securities. If this amount which you have calculated here is more than higher of these two amounts, then apart from board meeting unanimous resolution, you should also take general meeting special resolution. General meeting special resolution for what? For proposed loan, borrowing, for proposed loan, investment, guarantee, security. Okay, for proposed loan, investment, guarantee, security, you have to take general meeting special resolution. Hope that is clear. Hope you understood it. Now, there is an exemption from this general meeting special resolution, provided that loan, investment, guarantee, security is given to wholly owned subsidiary or joint venture. In that case, general meeting special resolution is not required even if the amount exceeds this limit. Okay, this specified limit. Just board meeting unanimous resolution would be sufficient in this case. Hope that is clear. This is section number 186. There are some additional points which have to be dealt. See, if the company wants to give loan, investment, guarantee, security under section 186, the company must not have defaulted in payment of deposits interest, and it should not also defaulted in statutory dues. That means PF, ESI and various taxes. In all those amounts, the company should not have defaulted in payment of all those amounts. And the rate of interest that the company is charging on this loan or guarantee must not be more than government bond yield rate. Hope that is clear. Next, the company must maintain a register of transactions entered under section 186. Also, section number 186 is not applicable to government companies which are engaged in defense production and unlisted government companies which have obtained approval from their respective ministry. Okay, the government companies will be governed by respective ministries of government. Okay, ministries of government. If this companies obtains permission from this ministry, then for those companies section number 186 will not be applicable. That is relating to section number 186. Now, section number 187 deals that the investments for which amount has been paid by the company must be held in the name of the company only. Hope that is clear. However, there are certain exceptions to this basic rule. The basic rule is that whatever the investment that the company purchases must be held in the company's own name only. And there are some 4 exceptions to this. Let us see. Firstly, securities deposited with bank for collecting income or facilitating transfer. That means company has purchased some securities, either shares of some other company or debentures of some other company. Now, for collecting the income on those securities, in case of shares you will be receiving dividend, in case of debentures you will be receiving interest. For collecting such interest income or dividend income, the company can deposit these securities with the bank. That is the one of the exception. In that case, such securities can be held in the name of the bank just for purpose of collecting the income, or let's say company wants to sell the securities. For selling, it has to find a buyer. Thereby, it can take help of a financial institution or bank for finding the buyer. Okay, for such sole purpose of facilitating the transfer of securities, such investments of the company can be held in the name of the bank. Hope that is clear. This is the first exception. Second exception, deposited with third party as security. Company has taken some loan. As a security for the loan, the company has deposited this investment in the name of some other third party. That is permitted. Okay, this is the second exception. Next, holding in the name of depository. That means basically all the securities which have been listed in the stock markets will be held in the name of depositories only. That is NSDL and CDSL. That is completely permitted. Next, and company must maintain register regarding these securities. Okay, if company the list of all the investments which have been held by the company in the name of these three parties must be entered in the register maintained by it. That is section number 187. Moving to next section, section number 188, which deals with related party transaction. See, under this section, we have to answer 4 questions. If these 4 questions are answered, this section will be completed. The first question is, who is a related party? And the second question is, what are the transactions covered under this section? And what are the approvals required? And what are the miscellaneous aspects? If we answer these 4 questions, the concept of section number 188 will be completed. First of all, we will see related party. Who is a related party? See, director or his relative. Okay, related party. Related party to whom? To company. Okay, now related party to company. First of all, director and his relative, key managerial personnel and his relative, firm in which director or relative is a partner. In such case, such firm would be related party of the company. Next, private company in which director, manager or relative is member or director. In such case, this private company would be related party to the company. Next, a public company in which director or manager is director and holds along with his relatives more than 2% of paid up share capital of this public company. In that case, this public company would be related party of this company. Next, any body corporate whose board of directors accustomed to act as per the directions of director or manager. Even in that case, such body corporate would be relative of the company. Next, person on whose advice director or manager is accustomed to act. In that case, such person would be related party of the company. And a subsidiary company, holding company, associate company, and subsidiary of holding to which it is also a subsidiary. That means there is a holding company. To this holding company, there is subsidiary 1, subsidiary 2. In this case, these both subsidiaries would be related parties to each other. Hope that is clear. And venturer of a joint venture company would also be related party to the company. These are the related parties covered under section number 188. Now we will see the transactions covered. That means if these transactions, that is these 7 transactions, are entered by company with these related parties, then following approvals are required. Following approvals are required. That is the idea of section. Now let us see the transactions covered. First transaction, sale, purchase of goods or material, availing or rendering of services. Okay, first one is related to goods or services, second one is related to services. Sorry, first one is related to goods or material, second one is related to services. Next, selling, buying, disposing of any property of any kind. Third one is related to fixed assets of the company. Next, leasing of company, which is also related to assets of the company. Next, appointment of agent for purchase sale of goods, services, and properties. Okay. Next, related parties appointment to office or place of profit. Office or place of profit means appointment of related party to a particular position in the company from which he will be earning some amount would be known as place of profit. However, if a person has been appointed to such a place of profit, then he has to earn amount other than remuneration. Okay, other than remuneration, if he receives any amount, then such place would be known as place of profit. Hope that is clear. Next one is entering into underwriting agreement. Now, what are the approvals required? See, firstly, if the transaction is in the ordinary course of business and it is at the arm's length price. See, even though the transaction is entered with a related party, but such a transaction is in the ordinary course and it is at the arm's length price. In that case, no approval is required. That is the first situation. Next, if the transaction is with related party but not at arm's length price, in that case, board meeting ordinary resolution is required. That means if company enters into any of these transactions with the related party and such transaction is not at the arm's length price, then board meeting ordinary resolution is required. Hope that is clear. Next, special contracts under Rule 15. What are the transactions covered under Rule 15? The transaction covered under Rule 15 are same as transactions covered here. These 7 transactions are only covered under Rule 15, but exceeding certain limit. What is the limit? Let me tell you the limit. In case of a sale or purchase of goods or material exceeding or equal to 10% of turnover of company. In case of availing of services also, exceeding or equal to 10% of turnover of company. In case of selling, buying, disposing of assets, the limit is exceeding or equal to 10% of net worth of the company. In case of leasing of property, it is exceeding or equal to 10% of turnover. Okay, 1 second, I'll erase this. Here, in case of appointing an agent, exceeding or equal to 10% of turnover of company. In case of place of profit, such person is receiving amount exceeding 2.5 lakh per month. Okay, and in case of underwriting arrangement, transaction is exceeding or equal to 1% of net worth of company. Okay, if these 7 transactions are exceeding these limits, then those transactions would be covered under Rule 15. Okay, if company enters into transactions that are covered under Rule 15 with related parties, then along with board meeting ordinary resolution, general meeting ordinary resolution is also required. Hope that is clear. These are the approvals that are required. And the miscellaneous one, all these related party transactions must be disclosed in the board's report. Hope that is clear. By this, section number 188 is completed. Moving to section number 184, that is various disclosure requirements of interest by directors. Basically, what would be the types of interest that the director might possess? There can be 2 types of interest. One is financial interest, one is managerial interest. Financial interest means holding any shares in the company or any capital in partnership firms. Those types of interest would be known as financial interest. And managerial interest means acting as director or acting as partner would be known as managerial interest. Such interests must be disclosed by the director to company. Okay. Now, at which times the disclosures must be given? You can divide it into 2 parts. One is general disclosures, another one is specific disclosures. First of all, we'll see general disclosures. See, in these both disclosures, general and specific, these are the types of disclosures has to be given. Okay, interest has to be disclosed. In general disclosure, at which times the general disclosure has to be given? Basically, there are 3 times at which general disclosures has to be given. Once again, yeah. Firstly, once the director has been appointed in the company, he will attend first board meeting now as a director. In such a first board meeting, he has to give general disclosure of all his interests. Hope that is clear. That is the first situation where general disclosure has to be given. And the second situation is, in every financial year, there will be first board meeting conducted now. In such first board meeting also, director must give his general disclosure of his interest in other companies and other entities. Hope that is clear. That is the second situation. Third situation, whenever there is a change in his interest, such a change has to be disclosed to the company. These are the 3 situations in which general disclosure has to be given. Now, specific disclosure. Now, when a contract comes for discussion at the board meeting and such a contract is with a body corporate in which director is holding 2% or more of its share capital, or such contract is with body corporate in which director is a promoter, CEO or managerial personnel, or such a contract is with a partnership firm in which director is a partner or member. In these 3 scenarios, director must disclose that he is having interest in this contract, okay, and do not participate in the discussion of such contract in the board meeting. This is relating to disclosures by the director. By that, we have completed section number 184. Moving to section number 189, which deals with register of contracts and arrangements that the company has to maintain. Basically, details to be entered into this register are 2 types of details. First one is disclosures under section 184. Under section 184, director will disclose his interest to the company. Once the interest is disclosed to the company, company has to make a note of these disclosures in register maintained by it under section 189. Okay, and along with that, under section 188, when the company enters into related party transaction, we have discussed that the company must note down all these related party transactions in a particular register. Even such transactions should also be noted in register of section 189. Okay, this is the register in which the transaction has to be listed down. Okay, now for these are the 2 types of transactions that has to be noted down in the register. Next, the format of the register would be MBP4, and the transaction must be noted in a chronological order, and register shall be placed at board meeting and signed by all the directors, and also be placed at the annual general meeting. Okay, at the board meeting you have to place these registers, and these registers must be signed by the directors who have attended the meeting. And at the annual general meeting also, these registers must be kept open for inspection by shareholders. And these registers must be kept at the register office in the custody of company's secretary or any other person who is authorized. Hope that is clear. Next, section number 190, which deals with contract of employment with managing director or whole-time director. See, now copy of contract with managing director or whole-time director, if exists, then keep written copy of such contract at the registered office. If at all the copy of contract does not exist, then maintain written memorandum setting out the terms. Okay, you have to maintain a memorandum in which terms and conditions on which the director, the managing director or whole-time director have been appointed must be noted down and must be kept at the registered office. And these can be inspected by the members. Hope that is clear. That is section number 190. Next, section number 191, which deals with payment to directors for loss of office, etc. in connection with transfer of undertaking property. This is applicable to all types of directors. Okay, payment of compensation to all types of directors. Section number 191. There is another section, section number 202, which will be applicable only to managing director and whole-time director. Even this is also deals with compensation only. First of all, we will discuss section number 191. Applicable to all directors, all companies, when on transfer of whole or part of undertaking or property of the company, or all or any of the shares of the company have been transferred. As a result of these two transactions, director loses his office. Hope that is clear. When he loses his office of directorship, then he will be eligible to the compensation, subject to the condition that disclosures have to be made to the members under Rule 17. That the disclosures would be to whom the compensation is being made, on what basis the compensation is being made, how much of compensation is being made. Those types of disclosures which have been listed under Rule 17 must be made, and along with that, general meeting ordinary resolution, that means approval of shareholders has to be taken for giving compensation to the directors in case of loss of office. Now, no compensation in the following situations. In the following situations, compensation cannot be given to the directors. What are they? Company has defaulted in payment of public deposits or interest, debentures or interest, any liability to public financial institution or bank, or statutory dues, that is PFESA, and taxes due to the government, or dividend on preference shares. If the company has defaulted in payment of these 5 payments, then company cannot give compensation to the directors. That is section number 191. Moving to section number 202. Compensation to managing director or whole-time director. First of all, compensation can be given in 2 situations. One is compensation for loss of office or consideration for retirement. Okay, the managing director or whole-time director are retiring. Since they are retiring, you can give some compensation or some consideration to the managing director or whole-time director who are retiring. Okay, retiring means retiring after completion of their term, not if they resign, you should not give the compensation. We will be discussing that. Next, calculation of compensation. How should you calculate the compensation? First of all, to calculate the compensation, you will be requiring two values. One is period, and another one is amount. You will be arriving at compensation. Now, what is the period? Period for which compensation can be given is remuneration he would have received if he would have been in office for remainder term or 3 years. Let's say you have appointed this managing director or whole-time director for 5 years. Now, after completion of 1 year, the office of this managing director is being removed for whatever the reason might be. After completion of 1 year, he is losing his office. Now, the remainder period is 4 years or 3 years, whichever is lower. 3 years is lower, therefore period would be 3 years. In case he is retiring after completion of 4 years, not retiring, his office is being lost after completion of 4 years, then the remainder period would be 1 year or 3 years, whichever is lower. In that case, 1 year would be the period multiplied by amount. Based on remuneration earned by him during the 3 immediately preceding years or lesser period of such of office held by him. See, during his office, he would have received some remuneration. Okay, per month he would have received some remuneration. Okay, average of remuneration that he has received during the preceding 3 financial years, or if he has held the office for less than 3 years, then such lesser period. Average of amount of remuneration received by him during such period would be kept as amount. Okay, some X amount. You will be receiving the compensation, the maximum compensation that can be paid to the managing director or whole-time director. Hope this is clear. Next, no compensation in the following cases. There are some 5 situations in which compensation cannot be paid to the whole-time director or managing director. First one, see, reappointed in reconstructed company. See, the company is being entering into some amalgamation or some merger. Thereby, due to this amalgamation or merger, the office of the director, the managing director or full-time director is being lost. However, he is removed from this company but appointed to the same position in the newly constructed company. In that case, no compensation will be given because here he is losing the office and we are giving his office in the newly formed company. Thereby, no compensation. Next, resigns on his own. If he resigns on his own, why would we give the compensation? We will not do. Vacated under section 167 subsection 1, that is due to disqualifications. If he vacates office due to incurring of disqualification, even in that case also we will not give any compensation to you. Company wound up due to negligence of director. Okay, his office is being lost due to the acts that are performed by the such director only. Okay, in that case he should give the compensation to the company, not the company. Thereby, company will not give any compensation to such director who has been negligent, and due to his negligence the company is being wound up now. And if the director is guilty of fraud or grossly negligence in performing his duties, even to such type of director also no compensation will be given by the company. By this section number 202 will be completed. Here we have discussed 191. Next, section number 192. Restrictions on non-cash transaction. Basically, non-cash transaction between company and its directors. Let's say company purchases some asset, let's say land, from the director. Now, if it purchases, it has to give some consideration. Now, it is not giving consideration as cash or any bank transfer. It is in return giving some other asset to such director. This would be known as non-cash transaction. Same would be the case, director acquiring any asset from the company without giving any cash or bank transfer. Instead, he is giving some other asset to the company. That would be non-cash transaction. First of all, parties involved. Director acquires from company, which is holding company, subsidiary company, associate company. And second, company acquires from the director. These are the parties involved. Now for this, approval is required. Whose approval? General meeting ordinary resolution is required. Okay. These transactions, non-cash transactions, can be entered subject to general meeting ordinary resolution. Next, section number 193. Contracts by one-person company with whom? With the sole member who is also director. Okay, who is also director. You can find it here. See, parties involved between one-person company and its sole member who is also a director. If you are entering into any contract with such sole member who is also a director, then section number 193 has to be complied. First of all, such a contract must be preferably in writing. If it is not in writing, list the terms of the contract in the form of a memorandum or enter in the minutes of next board meeting. And such a contract which you have entered must be informed to the registrar within how many days? Within 15 days from the date of approval of board of directors. Hope that is clear. By this, we have completed third chapter, meetings of board and its powers. And we will be left with, in the Companies Act, we will be left with operation mismanagement, compromise arrangement, and companies incorporated outside India, and inspection inquiry investigation. And we'll also be left with winding up. That winding up chapter I will not be revising because the length of the chapter is very huge and the marks allotted to such chapter is very less. Thereby, I will not be revising that chapter. And in the next class, we will meet with economic laws. Okay, first of all, we will complete the economic laws. After that, we will come back to Companies Act. In the economic laws, I will be revising the Foreign Contribution Regulation Act. Okay, in the next class, we will meet with Foreign Contribution Regulation Act.